Hello, good morning to everyone who is already here. I would suggest we wait for another 1 or 2 minutes to give people the chance to join. Yeah, there's other people joining. Yeah. So maybe we can start with the technical things before we start with the content. There will, as always, be a follow-up email where you can where you will get the presentation and also a recording of this webinar. And if you have questions, for everyone who hasn't been here before in this program, there is a question tab on your right-hand corner. You can type in questions as we go along, and we will either answer your questions in between, or we will answer your questions at the end. So, and the questions are only seen by us. So the other participants cannot see your questions, or feel completely free to ask whatever you want to ask. We will also only mention this without names. So it should be a webinar for you, so make the most out of it. Okay, I think then we can start officially. A very warm welcome to you all to our webinar today. We want to take a closer look at FIDA and the new opportunities FIDA will provide to the financial market. My name is Verena Ritter-Döring. For everyone who doesn't know me already, I'm heading the financial regulatory group here at Taylor Wessing in Frankfurt. When I started my career many years ago, PSD was on the table, so this has come a very long way from PSD to PSD3, PSR, and FIDA. But I'm of course not alone. As you can see, I brought my colleague Miroslav Ðuric. He's in my team. He's also very experienced in regulatory law. He's done this for many years. He focuses also on fintech business cases, but of course you can only advise fintech business cases if you know the regulatory framework of all of this for the financial market. So Miroslav is an expert in this field as well. So, and then I think we can start. I'll put this in larger. So we want to give you a little bit an overview of what is FIDA about, what is open finance compared to open banking. We will also give you some details of the new requirements. In the end, we will discuss a little bit the practical impact to the industry. And as I said, whenever you have any questions, please use the question tab for this. So let's start with, let me here. So open banking is something we all know. So if you know open banking, then open finance is basically the next step. So I wanted to start with open banking in this webinar. So open banking specifically refers to payment initiation and account information service providers. So those two have been new regulated entities under PSD3 to provide to the market an open banking framework. They are authorized or registered, have to register with BaFin, so they are regulated entities, and we have seen in the market lots of fintechs who are actually providing the services now. So open banking, basically, the services enable third parties to access the payment data or initiate payment orders at banks via a technical infrastructure. The customer, of course, has to agree because it's his data. And the European legislator feels at the moment that open banking has reached certain limitation and wants to open the market even further. There are a few new rules for those payment initiation service providers and the account information service providers in PSD3. So it's not a lot, but it makes their life a little bit easier. That's the idea. And I'm sure all of us here have been, have seen in the market payment initiation service providers. They are very often used when there is an instant checkout possibility on a merchant platform. And for the customer, it's easier, so the customer doesn't have to pay with credit card and wait until the money reaches the merchant. So the payment initiation service providers can directly, via the payment order for the customer, to the bank and the banking account, the payment account. So that makes online transactions faster and also a bit more secure for the merchants. And there are also business models in the market where you have funds in different accounts, and then you have an account information service provider who may also act as a payment initiation service provider, who then takes a look at the funds in the accounts and can rearrange or align the payments through your account so that it is more cost effective for the customer. So this is all old news. This is all what we already have in the market, and the European legislator thinks it's going quite well, so we can open up the market a little further. So today we will talk a lot about open finance, because FIDA is about open finance. So open finance is basically the next step of the journey. And third parties will have access, or will have the possibility to access financial data outside of the area of payment. So the payment area's open banking is already regulated in PSD2 and PSD3. But what about all the other financial products you might have in your accounts? So the aim here is to allow for database innovation and also for more competition in the financial market. I think this is something we need to have in our back of the mind. It's also about more competition and getting a better deal for the consumers. Basis of the open finance is the sharing of the financial data of a consumer to optimize the consumer's financial exposure to the market. So having said this, it is clear that the open finance also needs an IT infrastructure and the IT infrastructure needs to be accessible by the regulated entities who offer the financial products. So it is all about data, and it is all about IT access. So we will, as I already said, so we will be sharing financial data. We will give you an example in just a minute. So the FIDA regulation is all about sharing the financial data and regulating access to this financial data for market participants. This is all in alignment with GDPR. So this is anyway what the European legislator thinks he has done. He has also put in quite a lot of new data protection rules here, which is sensible because financial data is for every consumer something he or she wants to be protected. That is fine. So there is an extra set of data protection on top of the GDPR we already have. So the regulation is all about what we have put here on the right side. It gives the customer control over their data to benefit from the data and from new offerings in the financial market. It enables customer to get access to more personalized offers from day one. So the customer does not have to research everything on his own, and if he doesn't find the right product, then it's bad luck. The idea is that the market can offer more personalized data if the customer is willing to share his financial data. This will, as I said, improve the competitors, the field of the competitors in the financial sector. Yeah, and we need, of course, a regulated framework for accessing the data as well. So here's an example. So here on the left side is how it is today. So a customer has mortgages, might have some fund investments, has some other loans with one bank. Then he or she thinks, that's maybe not going too well. Maybe I can restructure my debt somehow, and he has to go and check this by himself. He has to do some research. Has to find in the market some advisors who can help him, whatever. Then once he has this, he can get an offer by another bank. So this is, yeah, for some people fun, for other people quite burdensome. And though the European regulator thought, let's do open finance, it might ease up things for the consumer. So same scenario in the beginning. Here, customer has mortgages and so on. Then he agrees that his financial data will be shared. For example, here via an app. This is the red thing. This should be an app on your phone. And then the customer, of course, has agreed to share his financial data, and then some provider via an app finds offers for him and then tells him, well, see, you can restructure your debts in this and this way with this and this institutions, and if you are happy with this, we can arrange for you to have this done. And then the consumer says, okay, I would like you to help me. And then all the financial data that are on the blue or black bank, the financial data will also be shared with a new financial institution or another bank, for example. yeah, to make it easier. So if the customer has paid his mortgages very regularly every month, then the new bank can see this, that it was quite a good customer. He really paid every month, and then maybe the new offer will be a bit cheaper than the original offer. So this is basically the idea. You have more competition, and this all is based on your financial data and also of the history of your financial behavior in the past. So, and before Miroslav will take over, we can have a quick look together on FIDA, the Financial Data Access Regulation. Yeah, this is basically about how to deal with the financial data in the financial market. As I said, it's data-based and IT-based. So it has been introduced, as you already might know, with the payment and financial data access package, which also brought us the drafts of PSD3 and PSR. So it is the third regulation in this package. Of course, nothing can happen with data in Europe without the consent of the customer. That is basically, since GDPR, everyone knows it. It's no news. It is also, the FIDA is also about providing control, efficient control over the data for the consumer on one hand, but also for the financial institutions involved. And since we do not want to leave anything to chance in the European Union, we have a new regulated service, the Financial Information Service Provider, I think. Miroslav will go into a bit of detail on this. So we have a new regulated entity. It's comparable to the account information service providers in the payment sector. We now have one for the rest of the financial market. So this all, we are here is very first stages. This all will apply 24 months after FIDA entered into force. So probably sometime in 2025. Maybe even a bit later. So it depends a little bit, but yeah. So it's quite some time. But if you are starting to think about your new business opportunities, it's actually always good to start early and to also observe the process until the regulation comes into place. There will be a lot of RTSs and so on, and BaFin guidance and European Commission guidance and so on. So there is still some things to come, but it gives you quite a framework now where you can start planning if there are some opportunities for you. And if you are a bank or regulated entity already, you also need to think about how you need to participate in this financial data sharing. So this is also something you should keep in mind when now listening to what Miroslav has to say. He will get into a bit more detail.
So hello everyone from my side as well. So we're gonna take a deep dive into FIDA proposal and see what is actually proposed under this regulation. So first, speaking about the scope of application, as Verena previously mentioned, FIDA has a very broad scope of application, so it covers pretty much every corner of the financial services sector. So those are the data that are going to be covered, data related to mortgage credit agreements, for instance, data related to savings, customers' investments in financial instruments, as well as their insurance-related investment products, but also some new types of investments that are becoming ever more popular, such as investments in crypto assets or other financial assets, as well as data related to this to this kind of investment activity. So for instance, if we talk about the investments in financial instruments, data that is going to also be covered under FIDA is going to be the data stemming from suitability and appropriateness assessment that an investment firm, for instance, conducts for its customers at the beginning of customers' journey. We also have here data related to customers' pension rights and standard occupational pension schemes, as well as non-life insurance related data, as well as when it comes to businesses, data stemming from their assessments of their creditworthiness. For instance, when a company is applying for a standard or a syndicated loan or credit rating, this data is going to be covered as well. So when it comes to FIDA, the main aim of the commission is to cover a standard data that customer is providing financial institution with. So for instance, that financial institution is typically collecting from the customer at the beginning of the customer's life cycle, as well as data that is transmitted by the customer later to the financial institution. So for instance, typical example for this would be transaction data, so data about the customer's behavior, investment activities, and so on and so on. Important to mention here is that this regulation is going to cover both personal and non-personal data. However, as mentioned previously, this regulation is a sector-specific regulation that sits alongside broader pieces of EU regulations that cover processing of personal and non-personal data, in particular GDPR and Data Act. The types of data that are not going to be covered here are going to be data related to payment accounts, which is already covered under PSD2, as well as two types of data sets that have been deliberately excluded from the scope. Those are data related to credit scoring of natural persons, as well as data related to customers' life, sickness, and health insurance related products. As you can see on the left-hand side of the slide, the list of financial institutions that are going to be covered by this regulation is very long. So it starts with some typical regulated entities that we all know, such as banks, credit institutions, e-money institutions, payment institutions, and MiFID II investment firms. But we also have here asset managers, such as UCITS, Mancos, and AFMs, insurance companies, and also some new types of regulated entities, such as crypto asset service providers regulated under MiCA, crowdfunding service providers regulated under the new EU crowdfunding service regulation, and so on and so on. When it comes to FIDA, it is very important to note that the regulation differentiates, when it comes to these financial institutions, between data holders and data users. And all of these financial institutions can act both as either data holder or data user. So financial institution is going to be acting as a data holder when it processes, collects, stores, and processes this data of its existing customers. So for instance, a bank that is processing data of its customers, it's going to be deemed as a data holder under this regulation. However, the same bank can be deemed as a data user when it's trying to get access to data of the customers of a competitor that are interested in switching to this bank and to basically move their data from the competitor to this bank. Under this regulation, it's very clear which types of entities can access customers' data, and we're going to come to details a bit later. So first, customers will have the right to access their complete data whenever they send a request to a financial institution. Second, these financial institutions, when acting as a data user, as well as newly regulated financial information service providers that we're going to explain in a bit, are going to be third parties that are going to be able to access customers' data based on customers' consent. And it's very important to mention that accessing and processing of this customer data is really limited to this special access and processing. So financial institutions and financial information service providers will be able to access and process data solely for the purposes agreed with the customer for a provision of a particular financial service or a financial product. And there are also limitations when it comes to data processing. So processing of personal data is going to be limited solely to that what is necessary for the provision of a service or a product to the customer. So I mentioned previously that we have a new type of regulated entities here. Those are financial information service providers. And now we're going to have a closer look what is here being proposed by the Commission. So financial information service providers are basically entities that are going to be authorized under this framework to access and process customers' data for the provision of financial information services. What are financial information services? Even though it's not clearly defined under the regulation, one typical example is, for instance, an online platform that enables customers to get aggregated overview of their various positions across various financial institutions in one place, in a dashboard. So for instance, we have in Germany some online platforms that are enabling customers to compare offers of different service providers. So for instance, insurance product providers, online brokerage account providers, and so on and so on. The idea here of the Commission is really to bring these entities within the regulatory perimeter so that it can ensure the highest level of protection of customer financial data when these entities are accessing and processing the data. This is going to be sort of like extension of the account information service provider framework that is already embedded in the PSD2 framework, given that financial information service providers are not going to be limited only to payment accounts, that they're going to rather cover a broad range of financial products, so investment products, insurance, mortgage, and so on and so on. It is important to mention here that the Commission is proposing that these entities will need to obtain authorization from their local NCAs, for instance, BaFin or Central Bank of Ireland, prior to commencing with the provision of these services in the EU. And the licensing framework can really be summarized as follows. So first, when it comes to substance requirements, Commission has really left some breathing space for these operators of these online platforms, given that they're going to be required to either be incorporated in the EU, or if they are based in a third country, to designate a legal or natural person to be acting as their legal representative in one of the EU member states. This person or this entity would basically be bearing liability for non-compliance with applicable requirements, and it's going to be the one responsible for communication with the NCAs within the EU. For the purposes of authorization, these entities will need to comply with a number of operational and governance requirements. So first, they're going to need to establish pretty much a straightforward governance and internal control mechanisms and processes in place. So for instance, risk management, accounting, fraud prevention processes and procedures that we know from other sectoral pieces of EU legislation already. In addition to this, they're also going to be able, given that their business is highly IT based, they're going to need to comply with business continuity, digital operational resilience, outsourcing and incident reporting requirements under the applicable regulations. And it's important to mention here that they're also going to be subject to new Digital Operational Resilience Act, DORA, which is going to be very big, significant milestone for these entities, given that even incumbent financial institutions are having some hard time digesting the amount and the significance of the requirements under the proposed DORA framework. European supervisory authorities have been mandated to develop RTS, regulatory technical standards, that are going to specify authorization requirements and necessary documentation that's going to be necessary for the purpose of authorization in more detail. When it comes to capital requirements, Commission is really leaving an option here for prospective applicants to either hold a professional indemnity insurance or to have initial capital in the amount of 50,000 euros. And as mentioned in the beginning, Commission is really conscious of the possibility that these operators of platforms may be third country applicants. So they're, as mentioned, so they're going to be able to have a representative in the EU and operate from outside the EU. However, when it comes to authorization, once authorized, these entities are going to be able to benefit from the EU passport. So following the simple notification procedure that we all know for instance, under PSD2 framework, they're going to be able to operate across EU27 based on a single license. European Banking Authority, EBA, will also create and maintain a register of all authorized FISPs. This register is going to include information on all FISPs that are operating on a cross-border basis based on the EU passport as well. Now we're going to have a look at some detailed requirements on the access to data under the FIDA regulation. So when it comes to data holders, so financial institutions, and as mentioned before, they're processing data of their existing customers, they're going to be required upon request of a data user, so other financial institution or financial information service provider, to make customers' data available to them based on the customer's consent. The customer's data will need to be provided to data users without undue delay, and also in a continuous and real-time basis. So data holders are really going to be required to keep these data corridors open and actively exchange the data with data users during this period during which they have a consent for data access. And what is also noteworthy here, contrary to PSD2 framework, where data holders, so banks, are not allowed to claim any compensation for access to data, data holders under the FIDA regulation are going to be able to claim certain compensation from data users, but not from the customers, to make customers' data available for them. However, the amount of this compensation is going to be set at a later stage within the so-called financial data sharing schemes that we're going to explain a bit later, that are going to be sort of like industry self-governing bodies that need to be established once the new framework becomes operational. And when it comes to provision of data, financial institutions will be required first to check whether the data user is acting based on the customer's permission. They will also need to make customers' data available in one format that is internationally generally recognized, standard, and at least in the same quality that is available to them. They will also need to pay attention to communicate and to exchange this data via secure means of communication with data users, and also to respect any confidentiality or trade secret related local regulations and laws. Last but not least, financial institutions will need to provide all their customers with so-called permission dashboards that we're going to explain a bit later. And when it comes to data users, they're also going to be required to comply with certain requirements. So, as mentioned before, only financial institutions and FISPs will be allowed to access customers' data under the proposed framework. They only can access customers' data for the purposes and under the conditions of the permission that was granted to them by the customers. It is important to mention that customers are going to be able to withdraw their permission at any point. So basically, financial institutions will need to implement and create IT systems in a way that enables them to successfully navigate granting and withdrawing of the customer's permission basically in real time. When it comes to personal data, as mentioned before, processing of personal data is, of course, going to be regulated by the GDPR. And here also we have, so to say, replication of this limitation requirement in the GDPR, that processing shall really be limited to that what is necessary. Also, when it comes to marketing, financial institutions can only use can process data for marketing purposes only in compliance with GDPR. And important to mention for international companies, where the data user, so financial institution, is part of a group, which is usually the case, customer data can only be accessed and processed by the group entity that got the permission. So data cannot be exchanged within the group. Also, data users will need to put some safeguards in place as well to protect customers' data in a proper way. They will need to put in place adequate technical, legal, and organizational measures to prevent transfer and access of non-personal data and personal data to third parties. They also need to implement IT processes and procedures in place so that they enable appropriate level of security when it comes to storage and processing and transmission of data. And once they don't have a customer's consent anymore, they will be required to delete customers' data basically immediately. So there's not going to be any compliance period that they can observe for that matter. And as mentioned before, permission dashboards are really one of the cornerstones of the proposed framework. So financial institutions that are acting as data holders will be required to provide their customers with a permission dashboard. This dashboard is going to pretty much be a dashboard in a browser or app version of their online, let's say, for instance, online banking platform that enables customers to monitor and manage permissions in real time, all permissions that they have given to the data users. The idea is really to provide customers with an overview of each ongoing permission, to allow them to withdraw permission given to data users, and allow them also to reestablish any permission withdrawal. So basically, this means in practical language, you can really picture this as a sort of like a settings in an iPhone or a smartphone, where you can easily turn on and off certain notifications. So the idea is basically here to allow customers to grant and withdraw permission for certain data users by just a click of a mouse or a click of a button. Also, financial institutions will need to include a record of all permissions withdrawn or have expired for the previous 2 years, so that customers here can really have overview of their past behavior as well. There are also some technical specifications, so financial institutions need to ensure that these dashboards are easy to find in their user interface, that they cooperate really with financial institutions acting as data users and FISPs, so that they can provide customers with all information within the dashboard in real time. And they will also need to include sort of say push-up notification function to keep data users informed of any changes in the permissions. So in real time, they will need to communicate to data users whether they have permission to access customers' data or not at any given moment. And I mentioned before financial data sharing schemes. So idea here is Commission really has imagined this to be sort of an industry self-governing body whose main aim would be to bring together financial institutions acting as data holders, data users, as well as consumer organizations that would, on an industry level, foster development of common, first, data sharing and industry-recognized interface standards, so for APIs that are really going to be a backbone for sharing of data within this framework, as well as joint standardized contractual frameworks that are going to govern contractually access to specific data sets under this framework. All data holders and data users will be required within 18 months from the entry into force of these regulations to enter, to become basically members of these financial data sharing schemes. They're going to also be able to become members of more than one. And it's imagined so that ideally that each member state should have at least one financial data sharing schemes. Financial data sharing schemes are also aimed to have certain tasks that are going to really enable proper functioning of this framework. So first, as mentioned previously, they will need to determine the maximum compensation amount that data holders can charge for access to data. Also, at the industry level, the idea is that they should really determine the contractual reliability of its members, especially in cases where they provide inaccurate data to customers or data users, or data in inaccurate quality, or where data security, in cases where data security is compromised or data has been misused or used without, so basically used without customers' consent. And last but not least, the idea is also that financial data sharing schemes should create at the industry level an independent, impartial, transparent, and effective industry level dispute resolution systems that should resolve disputes among the schemes, so between members, when members have certain issues among themselves, and so on and so on. So we're going to move now to some practical considerations, and Verena is going to walk you through some key practical considerations that we have identified for all and scope entities.
Yes, so here we wanted to give you an idea of the interplay with other key pieces of the regulation we already have. So FIDA is not something that comes into an empty space. We of course have DORA. DORA is about digital operational resilience, and it is a lot about IT requirements to make the financial market more resilient in the IT infrastructure. And we have a lot of new or refined requirements for regulated entities in the financial market under DORA, and FIDA will basically come on top of this. So so please bear in mind that DORA is something that affects all of us, and we have to look at our IT anyway. So if you have in mind a new business model, or if you want to already assess how you can participate in the financial data sharing, you can maybe enlarge your already existing DORA project and also take into account FIDA as well. So as I already said, we have the Data Act and we have GDPR. This is in alignment with FIDA, so FIDA complements those acts. Yeah, so if your GDPR setup is already great, then you have on top, you can do FIDA, and then you already know how to get consent from the consumers and so on. So outsourcing requirements, we have a lot of outsourcing requirements already yeah, to observe in the market. DORA refines the outsourcing requirements for IT-related outsourcing already, but then we also have the EBA guidelines. Yeah, we have BaFin guidance on this. So we have a lot of this as well. And also FIDA comes on top of this outsourcing requirement. So if you want, for example, if you want to offer an API access to your IT, or to get into the data sharing, you will not unlikely use an IT service provider for this, and then it is outsourcing, and then the FIDA requirements need to also be observed in your outsourcing agreements. So, and we also have mentioned PSD3 and PSR. If you are an account information service provider already, you might want to think about growing your business and maybe also become a financial, so a FISP under FIDA. Yeah, this is also something that goes hand in hand, and FIDA is, as I said, part of the whole package. So you might want to take a look into PSD3 respective PSR, where the requirement for the payment market are set out. So to give you a little bit of the framework we are this only part of the regulation we have. There's lots more, but those are the main the main acts that will have an interplay. Oh, am I now? Have I been mute? No, I think that now it's going again. So, and in our last a slide, we always have a slide where we want to talk or give some inspiration on the impacts on the industry. FIDA will of course impact the industry. There was also one question I think I can answer now. One question was, how popular do you think FIDA will become? Will it completely overtake other forms of financial data sharing? I think yes. I think it will become quite popular. Same as open banking was an opportunity lots of market participants took, actually. And in the beginning, there might be also from the consumer side a little bit of hesitation, because it's all about my data, and my financial data is very sensible data. But also, if you get better offers, if it can benefit you also financially, I think this is something that the consumers will ask for, and then the market will, of course, react. I think it will be interesting, and it will also be far-reaching. So, what do you have to do when you assess how FIDA will impact you? You have to look at your contractual arrangements in your main areas of work. I think the main implementation challenges will be, it's a lot going on at the moment in parallel, in particular in the IT regulation. So I think this will be quite a challenge. You also need resources for everything. I think this will quite be a challenge. And if you think about becoming a FISP or establishing a FISP in your group, it's just whatever you do when you start thinking about getting a license. It will take some time. It will have to be based on a solid business case. You will have to do some market screening and so on. I think those are the obvious legal impacts. The implementation work that is to be expected will be quite a thing. We are also expecting a lot of regulated framework there also on how the interfaces will work, so that everyone can have access who wants to have access as a FISP. So also the traditional players in the market, banks, and so they have to open up their data. They have to grant access if the customer wants it. So this started in the open banking space already, and it caused quite a lot of practical problems. I think we are now a step further. We have experience with this already, but this is on a much larger scale, what FIDA provides. So we will not start FIDA on a large scale in 2025-26. I think it will grow over time, and it will also provide opportunities for business model we might not even think about at the moment when we start out with it. The IT infrastructure will play a huge part in this. It will also not only involve regulated entities and these new FISPs, but also IT service providers. IT service providers will also be interested in FIDA as well, since they can provide the infrastructure. yeah, this is what we said, arrangements with third-party service providers. This is usually IT providers. It's a good business model for them as well. Yeah, you might also want to think, if you are an already regulated entity, you might want to think about how you can make use of customers' data, how you can leverage it. Maybe if you get access to a customer data from another institution, how can this impact your business model? How can you develop your business model further? Are there new products you want to offer, different products? I don't know, things like this you should bear in mind. Yeah, and I also think we will expect quite a number of new market participants. With FISPs, there will be fintechs who are completely IT-based, as apps and so, as Miroslav already said. Yes, they will come into the market, and it's the same as with open banking. It might start out small, and then the traditional banks might buy them and integrate them into their own infrastructure and product offering. I think we can get an idea how this will all work from, yeah, taking review of how the open banking market works. So I think this is it from our side. We have some questions. So Miroslav had all those questions, but since the questions are quite interesting.
Yeah, I mean, maybe it's just important to clarify here when it comes to data sharing really, the entire process, the entire life cycle starts with customers' permission. So if I want to give, for instance, Bank A my consent to get access to my data that are stored currently with the Bank B, only after I provide this consent, so explicitly by sending a request, the process can start. So the institutions cannot start the process without customers' consent, and once I withdraw my consent, so that may be like 3 in the morning, they need to exchange this data. So this withdrawal in real time, so that at 3:15, this financial institution can no longer access my data. So I hope that clarifies these questions. And also there was a very interesting question when it comes to data related to loans of natural persons and data related to the assessment of creditworthiness. I think this is a really good question, given that on the one hand side, we have the exclusion of all creditworthiness related data, so they're not going to be part of this framework and that they cannot be exchanged between financial institutions. However, on the other hand, we have in scope data related to loans. So how we read this is pretty much that when it comes to assessment of creditworthiness, usually banks are going a step further. So they're assessing various personal information about the applicant, so related to their family situation, previous defaults, occupation, and so on and so on. Whereas the data related to loans is rather limited to data related to types of loans the customer was taking in the past. What was the duration of these loans? So were there short-term loans, medium-term, long-term loans? What was the interest rate? What is their sensitivity to, let's say, for instance, variable interest rate or fixed interest rate? So this is more in scope part of this data, whereas data related to personal circumstances of the customer that are being used for assessment of creditworthiness, including data related to previous defaults of the customer, are not going to be part of this framework. And yeah, also there was a really good question, which maybe also needs additional clarification. So when it comes to data transfers between entities and the very processing of data, it needs to be emphasized that FIDA is really imagined to be a sector-specific piece of EU legislation that's going to regulate the operational framework for the exchange of data within the financial services sector, whereas the processing of the data itself is going to be still regulated by a broader pieces of EU regulations, so that cover, for instance, processing of personal and non-personal data, so for instance, GDPR and Data Act, respectively. So these will continue to apply. Then we're going to really run alongside FIDA. Are there any other questions? We have a couple of minutes left, so feel free to.
Yeah, I think we can also take, there was another question of the creditworthiness assessment and the loan data. So the loan data can actually be shared. And I think I agree there is a partial conflict, because the behavior of the customer in previous loan agreements, that can be shared. So if he had very regular repayment schedule, if he was on time with his repayment, I think this is something that can be shared, and it will of course be part of the creditworthiness assessment. But the creditworthiness assessment is something each bank has to do before he grants a loan. So you can never ever rely on another person's assessment or another entity's assessment on this. Even if you use Schufa data, you also have to verify those as well. So I think there is a partial conflict, but so if, for example, Bank A used for the creditworthiness assessment Schufa or another provider for this as well, and they did their own assessment, those data cannot be shared. But the loan history, of course, can be shared. But the loan history alone does not make creditworthiness assessment of the second bank who wants to grant a loan. So I think this is.
Yeah, and also, of course, I mean, we also need to be aware that this is like the very first draft. So from the experience with other regulations, we can see some fine-tuning in the European Parliament, especially as the process moves on, in the ECOFIN Council and so on. So this is a good point. We believe that probably there are going to be some further clarification, given that we have here an overlap, for instance, that we don't have in the, for instance, insurance and investment product space, but we're going to see how will this evolve. And also there was one question I think that was really good when it comes to the impact of this regulation. We really have a feeling that this topic didn't get enough attention within the industry as it should, because really, if you look at this proposal from the operational and technical standpoint, you can quickly realize that financial institutions across the EU27 will need to develop an entire IT infrastructure that will need to be used for this, and the operational processes that are going to accompany this, basically from scratch. And we see that this topic is getting much more significance in consulting circles, way less in the industry circles and in legal as well. So we believe that probably once the dust settles with the PSD3 and PSR that were proposed alongside FIDA, probably end of mid next year or end of next year, as the regulation moves through the EU legislative making process, we're going to probably hear much more about it, and we're going to see probably institutions getting this topic on top of their agenda as the time moves.
Yes, maybe one last thing about the consent of the data. What is in scope? What is not in scope? It is always up to the customer, and it doesn't matter if the customer is a company or if the customer is a person, a natural person, and in particular, if he or she is a natural person. The customer can, of course, say, "I want those data to be shared, but those other part of the data I do not want to be shared." So this will also become probably clearer when we get some RTSs on this. It is always also up to the customer. So if he had a loan where he did not really be on time with the repayment, he might say, "I do not want this data to be shared." So this can also happen. So it is not black and white, what is in scope, what is not in scope. It is also, we have also to take into account what the customer wants to share and what of his data he doesn't want to share. Because, as I said, it's all about financial data is very sensible data to every consumer. Anyway. Okay, I think that's it. It's 12. Thank you very much for your attention and for all your questions. If you have some more questions, you can always send an email to us or call us, and we can discuss. We are always happy to discuss also informally the process of FIDA and getting new business cases in the market.
Yeah, we're going to cover this topic closely in the coming period, so just stay tuned. We're going to definitely organize something in the future as well.
Yes. So thank you very much. And we'll keep you also updated with new webinars in the new year. So stay tuned and have a nice afternoon.